So, you're starting a business, right? That's awesome. But it immediately brings up one massive, high-stakes question we're tackling in today's explainer. Should you choose an LLC or a corporation? It's literally the foundation of your company, and trust me, the answer is definitely not a simple one-size-fits-all.
We really need to dive straight into this. Why? Because making the wrong choice right out of the gate could cost you thousands of dollars down the road. We're talking wasted taxes, crazy legal fees, and just a mountain of unnecessary paperwork. Way too many entrepreneurs just guess, or they, just copy whatever their favorite tech startup did, and they end up paying for this heavy legal infrastructure they don't even need.
Here's how we're breaking it down today. We'll meet the contenders, look at liability protection, dive into the tax divide, talk ownership and fundraising, look at the red tape and costs, and finally get to the final verdict.
All right, Section 1, meet the contenders.
Let's lay the groundwork. First up in the ring is the Limited Liability Company, or the LLC. You hear about this one everywhere, right? And for good reason. An LLC is incredibly popular because it basically acts as a flexible, super easy to manage shield between your personal bank account and your business liabilities. It gives you that essential protection, but without forcing you to deal with all the stuffy formalities of a corporate boardroom.
On the flip side, we have the corporation. Now, this is a totally separate legal entity. Think of it as its own person. It's owned by shareholders, it's governed by a board of directors, and it's run by officers. This is a highly formalized structure, and it's almost always the go-to choice for businesses that are planning to raise serious investment, issue stock, or eventually go public.
Moving on to Section 2, the shield, also known as liability protection.
Here's the bottom line on protection. Out in the real world, lawsuits happen. It's just a reality. The great news, both an LLC and a corporation provide what's called a corporate shield. If your business goes into debt, your personal assets, like your house or your car, are generally off limits to creditors. But, and this is a huge but, that protection isn't absolute. You can actually lose that shield if there's fraud, illegal conduct, or if you fail to strictly separate your personal money from your business money.
Which brings us to Section 3, the tax divide. Now pay close attention, because here is where these two entities diverge wildly. Most LLCs are taxed as pass-through entities by default. This means the business itself doesn't actually pay federal income taxes. Instead, all those profits and losses, they flow directly right through to the owner's personal tax returns. But a traditional C corporation, that gets hit with what's called double taxation. So what does double taxation actually mean? It means a traditional C Corp first pays a corporate income tax on its profits right at the entity level. Then, if the remaining profits get distributed to the shareholders as dividends, those shareholders get taxed again on their own personal tax returns. 2 layers of taxes. That is a massive difference from how an LLC works.
But, of course, there's a powerful twist to all this. Eligible corporations can actually make a special tax election with the IRS called an S Corp election. It's specifically designed to help you avoid that dreaded double taxation and completely alter your tax treatment while keeping some pretty unique benefits.
Now remember how an LLC is a pass-through entity by default. Well, some eligible businesses opt for this S Corp election to highly optimize their tax strategy based on their specific income. But listen, please don't fall for the trap of thinking an LLC magically eliminates your taxes, or that a corporation is always a tax nightmare. Neither of those is universally true. Your absolute best choice depends entirely on your specific income and your long-term plans.
All right, Section 4, ownership and raising money.
Let's pivot and look at the future. How do these structures affect your day-to-day management and your ability to bring in cash? Well, LLCs give you incredibly flexible ownership rules. You can totally customize who owns what and how things are run using a simple operating agreement. Corporations, though, issue actual shares of stock. That makes ownership super easy to transfer and, frankly, much more attractive to institutional investors.
And speaking of raising capital, corporations hold a massive advantage here. Venture capital firms and big institutional investors absolutely prefer corporations. They like them because they can easily issue stock, manage equity pools, and support aggressive future growth. LLCs can raise money, sure, but they are often seen as way less attractive to those heavy-hitting outside investors.
Let's talk about the not-so-fun stuff in Section 5, red tape and costs.
This brings us to the hidden reality of starting a business, the ongoing red tape and the fees. And spoiler alert, your baseline costs are going to vary wildly depending on where you are. The cost of forming and maintaining either entity is totally dependent on your state's official requirements. Filing fees, annual reports, franchise taxes, All of these can differ significantly from state to state, so you absolutely must check your local rules.
And beyond just the money, the ongoing paperwork is vastly different. LLCs are generally pretty low maintenance. They require much less paperwork and far fewer formalities to keep their legal status intact. Corporations? Not so much. They demand strict compliance. We're talking mandatory annual meetings, official board resolutions, detailed meeting minutes, and a whole lot of extra compliance depending on the law. It's a significantly heavier administrative lift.
Which brings us to our final stop, Section 6, the final verdict.
We've looked at the stakes, the taxes, and the red tape. So which path is right for you? Well, the LLC is basically the undisputed champion for most small businesses. If you're a freelancer, a consultant, running an agency, or buying real estate, the LLC is usually the perfect fit. It hands you that essential personal liability protection, but keeps your life incredibly simple and flexible.
On the flip side, you should absolutely lean towards a corporation if your immediate game plan involves raising serious institutional capital. If your main goals are to seek outside VC investment, issue stock options to your employees, and build a machine designed for rapid, large-scale expansion, then the corporation is almost certainly your preferred vehicle.
So let's wrap this up with one final thought. There is simply no single best business structure out there for everyone. The golden rule here is structure follows strategy. As you map out your game plan, make sure you talk to a professional to ensure your legal foundation actually matches your ambition. So I'll leave you with this. What is the ultimate goal for your business? And are you building it on a foundation meant for a local shop or a global empire? If you found this explainer helpful, make sure to subscribe to Decoded Laws for more on business law, finance, and your legal rights. Just a quick reminder, this explainer is for educational purposes only and isn't legal or tax advice. Always consult a qualified pro before making your big moves. See you next time.